by 2% for the third quarter GDP. Our next guest says that as oil prices hold at these depressed levels, struggling U.S. producers will eventually go under in large numbers. Joining us right now is the author of the book, The Frackers, and Wall Street Journal special writer Gregory Zuckerman. Greg, good to see you. Thank you so much for joining us.
Great to be here.
All right, so real quick before we get to the frackers, this is an important part of the oil story. Your analysis of the 2.0% GDP, third quarter final assessment, any thoughts there?
A tad higher than some had expected. We're seeing weakness in kind of areas that we had seen growth, such as the energy business, which has been responsible for about a third of growth in the past few years. And people are enjoying lower prices at the pump, but there's a flip side to that, too, and we're starting to see a little bit of a pain there, too.
Well, when you see oil prices down, what, 35% to 40% from the highs, you have to believe some of those fracking companies will not be able to produce and make money at these levels. They go bankrupt.
Yeah, the surprise, quite frankly, is that more of them aren't bankrupt at this point. I call them zombies because they should be dead and they're not. And the reason is Wall Street is giving them a long leash. Banks are extending their credit. There are private equity firms on the sidelines with lots of cash who want to invest in energy. To me, you go long only when you start seeing this rash of bankruptcies, the Chesapeakes and the Sandridges. When the high-profile guys go under, that's the only time, to me, when you start getting a little more optimistic about buying energy.
Is this the Saudi OPEC strategy, essentially, to crowd out the market?
It is, but it's not quite working because U.S. production continues apace. I mean, we're about 9.3 million barrels a day, which is down only about from 9.6. So we're not seeing them crushed like the Saudis expected. So the Saudis are fighting the U.S. frackers, they're fighting the Iranians, ISIS, Russia. They've got a lot of people that they want to keep prices down to kill off.
And I'm sorry, Mike. The oil glut and these low prices is particularly devastating for the Russian economy, right?
Yes, very much so. So if you think about what happened with Reagan, you know, Reagan did a great job of killing off the USSR, but a lot of it was the Saudis and lowering oil prices. And I think that's part of the reason why they're fighting off again. They've got to, again, the Saudis have all kinds of enemies, and they're trying to hurt them all.
So when you look now, the new law that was passed where we can now, for the first time, export oil from the U.S., I think that's a bigger story than it really was played out in the media. Do you agree?
Well, near term, it doesn't mean that much because the market is flooded with supply. But I completely agree, kind of medium and long term, it changes the dynamic because people in North Dakota and in Texas can say, okay, yeah, prices are low now, but longer term, maybe we can do some exporting. So it'll help marginally, those guys.
Look, as we peel the onion back on this GDP number here, GDP is up 2%. Corporate profits down 3.3%. So when you factor in oil down as much as it is, how do you assess the economy right now going into 2016? So
profit margins have been so high for so long, and we've all sort of expected them to come down. We're starting to kind of get some nervousness that maybe they can't stay up so high, and revenue is not so strong. So you do worry when you talk to sort of hedge fund managers and other kind of people laying bets for 2016. Earnings are a concern.
Earnings are concerned going into 2016.
Yeah, very much so. And, you know, multiples aren't exactly cheap either.
Yeah, and we touched on this earlier, Greg, that although multiples are high or near historic highs, we're also seeing a massive amount of stock repurchases out there. So companies reducing their float. So I don't think you really, I'm in the camp that you don't really need to see massive expansion in growth or even in PE multiples for 2016 to support a higher S&P valuation. I think we can get there if we continue to see the type of stock repurchases we've been seeing.
Yeah, although for the economy overall, stock repurchases aren't nearly as good as reinvesting in your business, and it sort of says something about the economy that people are buying back shares
instead of reinvesting.
Exactly.
Yeah. So let me ask you about the economy here, because we got an economy that's sort of 2 steps forward, 1 step back. We see that again from the GDP. Then there's markets and impact on markets. What's your take on what happened at 3rd Avenue, where they shut the gates, you couldn't get any money out, no liquidity, CEO was pushed out. Now everybody's worried about other credit funds.
Yeah, it's fascinating. To me, it's twofold. It's a reach for yield. So we've had interest rates so low, the Fed has kept things exceedingly low for so long, and people have reached. When you look at this fund, they were buying non-rated debt, CCC rated debt, and there are other funds like that, and it's worrisome. But it also tells you about energy and how it's leaking in. There's this ripple effect on other kinds of markets, like the junk bond market, because about 15% of junk bonds are energy related. So it makes you concerned kind of long term there, because I think energy prices prices are going to stay low for next couple of years at least.
The concern has to be that it stays, fenced into a place like Third Avenue, because if this can leak out into the broader markets or into a large mutual fund or a large ETF, I think that's where you could start to talk about systemic risk,
yeah,
which I don't think is there, but that's the potential.
I agree, that's concern, but there aren't the leveraged kind of buyers you had in 2008, so it makes it a little bit of a less concern, to me anyway.
So when you see the fracking situation right now, you know where oil is. Do you get concerned that we're going to see job losses in that segment of the economy, energy, sort of bleed out to the rest of the economy?
I don't know about bleed out, but there are large parts of this economy, of this nation, that rely on the energy business. You forget about that. I mean, I've traveled all over the country, North Dakota and places in Texas and Louisiana and Pennsylvania even. So about a third of growth in recent years has come from the energy business, and that's all going away, you would think. I mean, you're still seeing production, but it's slowing.
Yeah, but what about the fact that with oil where it is, it's a positive for things like airlines, car makers, I mean, the companies that use oil as an input?
Yeah, that's the offset, and you look at airlines, for sure, they're enjoying this situation. And consumers, you're not seeing the spending like you would have expected, but sure, at the pump, when you see prices below $2, that's got to lift the spirits holiday season as well.
We'll see about that. Greg, good to have you on the show today.
Great seeing you.
Gregory Zuckerman joining us there, Wall Street Journal. Don't forget, Mornings with Maria starts every day at 6 a.m. Eastern right here on the Fox Business Network.